Good afternoon, everyone. Today is Sunday, it's March the 3rd, and this is the Metastock Math. As you know, we'll be talking about the overall environment, what we are looking at, and then how we might position our trades in the long term. So the first thing we're going to do is look at what Metastock is telling us from a weekly perspective, which is very, very important. We are well up above 50, and so that's very trending. But we have our first resistance zone showing up very close to this area, right? We have 28.19. We actually just breached that 28.19.75 just a minute ago. And so we are looking at bullish momentum that moves from this area of resistance into the next high, potentially at 28. It says 31 on the weekly. The daily chart has 28.24 as the resistance zone. And so these are the regions that we're going to be looking at to potentially give us our next line in the sand. What are we looking at? Bullish weekly formations, but notice what's happening between the open and the close of these weeks that we are experiencing, particularly last week. 2 weeks before that, 3 weeks before that, we had a big expansion zone. We had this, and so everything has looked positive. We always can look to the left when we are retracing old positions in terms of price positions to give us our upside targets. So things look fairly bullish in that aspect. If you are thinking about looking at charts overall, and what they're doing, you're going to think to yourself, hey, listen, this is bullish activity. I'm going to pull back, and on my pullbacks, I will have buy zones. One of the easiest things to do if you are trying to see whether it's time to take profit from your long trades is by simply running a trend line. And that seems, tremendously simple to say, but it is quite true. You can look at it and say, as long as I see higher lows overall, I am going to be seeing bullish price action. But 1, 2, 3, 4, 5, 6, 7, 8, 9 days running, we pretty much have built in a tremendous region of tight action. And what we've seen corresponding to that is volatility dipping, VIX being the lowest levels it's been in a while. Selling volatility in this kind of environment, not usually a grand thing to do. It's better to wait for it to break and expand because this chart could easily rise into its next areas of congestion. Here's our resistance zone. What am I seeing? From my perspective, here's our bullish action. So we're very, very bullish. It's unusual that we spend this much time looking at these formations without having any kinds of dips. The other thing you'll notice is that our lines, we could have them as candlesticks, but our lines that give us the bars of high, low, open, close are not green, which establish very solid trending environments, or red, which are also trending environments, but negative. They've just been black. And so that tells us, hey, be careful. Now, here's the thing. Could we have a dip? Absolutely. The first time we have a big dip, buyers are going to come into the fray, and they could come in really as low as this number, 2708, as high as the number 2729, or they can continue to rocket to the upside with the next event essentially all the way up here at 2877. Now, what do we do as traders? If you're long, nothing's giving you a warning signal to get completely out of your trades. But in my mind, there's a lot that says, listen, I've slipped to neutral zone behavior, and so I need to take some profit because in my neutral zone behavior, I can certainly have, let's take a look at a crosshair here. See this neutral zone behavior? you can see that it brings dips into the environment before bullish action holds up again. You'll notice that opportunity existing across the board, and so you want to watch for that in general. So for your trades where you're looking at your pullbacks, you don't want to add unless your pullbacks are really nice and deep into areas that you can see as weekly support. When we move to here, you can see my lines coming in to these areas, and you can look across the board and say, wow, I can see big support action in this area, and I can see really big support action well beneath that area as well. So you really want to watch for that in general. Otherwise, things still look bullish, but they're cautiously bullish. So you wait for pullbacks to add. You don't chase things out. And if you have not entered long, it is much better to wait for pullbacks to engage. Do your pullbacks need to be very deep? Listen, there are ways, there are environments where charts will come back for you and environments where they won't. And so let me show you something. If I go to a 4-hour formation, as we can see here in the Nasdaq, I can see that my 4-hour formation is grinding upward with lots of pockets of neutral, bullish, bearish, neutral behavior. Now it's slipped back into bullish, and we've got this bullish, and the early morning event is the punch up into this area where I've shown as resistance. There's also a level just below that that is round at about 72 18, 72, 14. So we're looking at that somewhere around that area. But as you can see, this slope of motion is not steeply up, sort of like this, right? It's not steeply up at all. What it is moving back and forth, undulating. That gives you an environment where your pullbacks are going to present buy zones. They're going to be savage, and they're going to bounce right off the bottoms. And if you want to look for examples, go to the last few days and see how the deep dips that looked really nasty, what they were doing was coming into regions of old resistance and support. You can see them right here with my crosshairs, and then they're bouncing. Deeper edges give us these motions, and so far our old resistance is holding as new support, and we continue to hold upside pressure. This is very steep. Notice what happens here though, folks. If I draw a line at this region here in the chart, I can see that most times when I get to this line, what happens is that I will bounce and then I have a little fade, and that is showing almost every single time that I come into my 4-hour formation that sits here above 70 on the stochastic that I'm using. If we go to the daily chart, we're going to see something that gives us the same kind of range, and how unusual it is that we are holding momentum so high for so long. You can see it back here occurring the same amount. That went from about May the 10th to June the 22nd. This has gone from January the 14th to the present time, right? And so we're roundabout looking at, maybe a little bit more time on this edge than we had over here, right? But there's a lot of missing data here because this was not a contract that was actively traded. We're not looking at a composite chart here. We're looking at the individual contract. And so as we see this, our mind should be saying, listen, 1, this is unusual. 2, it's still bullish. I am underneath a moving average that is grinding upside. That's also very unusual, folks. I have to tell you, it is quite unusual. And if we do this, we can draw a couple of lines, right? We can draw this one, or we can move it up over here and make it just a little bit tighter so it looks like it's holding that edge. And you'll be able to see, hey, listen, as long as I hold that trend line and it bounces up, I've still got the opportunity for a buy zone, but all of a sudden I'm seeing a lot of sellers at the top here, and I really don't have momentum grinding me to the north aggressively. It means my pullbacks are going to be buy zones, and I'll be able to move upward in the chart. If we take a look at the weekly formation, we're going to see that what we've been doing is, what we've been doing is grinding through these motions. And I'm going to delete this line. We're grinding through these motions, and you can see resistance sitting here. You always know where targets are in a chart that's been moving through areas that it's already tested. You look to the left, you find where old support has become resistance, and you anticipate that as a target as long as your momentum is bullish. All right, that's a very straightforward way to look at the charts. Let's take a look at the YM. The YM doing the same sort of thing, very high momentum, very, very high momentum, also underneath the moving average. Again, unusual in general, quite unusual in general. And so your job is to wait for the pullbacks and allow the chart to do its thing, okay? Do not chase in this environment. Here's where you might want to chase, okay? If you come through a day where you continually making higher lows and higher highs, the Metastock is green, your slope is very upward, your moving average slope, which here, as you can see, the parameters, the type is a time series, a 30 time series, and you can put that on there. If it's steep and your SMI is steep and these lines are green, then yes, you can chase. But when those environments do not show themselves, it means that your highs are going to fade into support, and that is what we are seeing right now. This one has not done as well breaking forward, but you can see old support, new resistance, and here we are at this same resistance line up above 26,270. My suspicion is, because that went from neutral to bearish, that what we're going to see is an exhaustion pattern, which is right here. I would love to mark out, I'd love to have a demarcation of that, but I can't right now. I'll figure out what to do here. But this demarcation right here tells us that these bounce actions are going to have selling pressure. So what you need to look for are areas that support held that you can come back and test. A lot of people don't like this idea of coming back to wait for support, but I have to tell you, if you can identify the environment appropriately, you are going to have much less risk, much greater reward, and the way that it looks is incredibly similar across the board. So let's take a look at oil. Oil has been in a pretty sideways patch, right? And it's just broken out few weeks back, and now what's it doing? Well, it's trying to continue to break out, but look to the left. Support, resistance, still resistance, breaks out, and now it's holding a brand new low. So if you look at this 54.77 to 55 area is rock solid support for this chart. Volume continues to climb, so your pullbacks are going to be buy zones. Take a look at this. See this upside motion, but what is the slope of your moving average? It's downward, and that tells you that the chart has been fading and it's now in recovery. So you want to look for what this recovery zone is actually looking like, and seeing that fade action into this area around 55 is going to give you the best risk to reward environment versus watching it break out of an area and then just taking that breakout because you believe it is a good breach of resistance. It simply is not the appropriate environment. There is such an environment, and when it comes up, I'm going to be sure to show it to you. Right now, it does not exist. This is not a breakaway formation. Again, look at how breakaway looks. The slope starts turning down of your moving average, and your stochastic starts turning down. This turns red, and it tells you that you have got momentum that is really kicking out. The buy zone for this one came at the base of this chart, and we can see whenever that goes flat and we stop heading lower, it is always a signal that we are moving to the north. Always a signal. This has turned red. It's a sell zone. In general, it's bearish. And so what that's telling you is don't buy the breakout. Do not buy the breakout. And if you buy the pullback, you better watch for your resistance zones to tell you where the chart is headed. Notice the zero line here, right? If I have this and I'm coming from this area, my chart is going to try to pull back to give me a good support zone. We are looking in this area for bullish action to really steady itself so that we can go long on the swing in this particular chart. Lastly, we're going to take a look at gold. I know this is longer than my normal videos, but this is a big recap for you to take a look at the charts and say, okay, where is the instrument that I am interested in trading? Does it sit in the SPX, the S&P 500? Does it sit in the NASDAQ? Is it part of the Dow Industrials? Is it part of the oil or oil services complex? Is it part of commodities? All those sorts of things. And you can use what's happening with the broad market to give you an idea of what's going on. And I have been very bullish on gold until the last couple of weeks. So let's take a look at what happened. Okay, big resistance area. This line, if you want to go to the last Metastock map that I did for the recording, you are going to see that this is an unchanged line. I said, hey, listen, watch old support, test as resistance, watch it break down, fail to hold, and you've got yourself a sell zone. Notice it comes in much later if you're waiting for the parameter. Now, the parameter is going to tell you, hey, if this says sell, you're going to be going down into your frontline support. So where is that? Well, if I look for where old support turns into resistance, becomes support again, and is now being tested, I really am in a very big support zone area, and that support zone could run as wide and deep as this line right here, which is 1284. Okay, it could come all the way down here and still bounce. Here's a very, very important thing to remember. When you have a very bullish pressure event and it begins to sell off, notice because these lines are green, it suggests that any sell-offs we have are going to come first into buy zones, and they're going to try to bounce. That's just what happens. It's just like sell zones that shift. You know that when they shift and turn into buying spaces, like this turns bullish, or my lines, my bars turn green, it's going to come back and test my resistance areas. And take a look right here. Turns to a buy zone, comes back and tests our support areas, really very close to that area before it gives us another opportunity to move to the north. Let's go to the daily. Daily charts, always messy in gold. You can see that, buy, sell, buy. I like to use 3-day charts. I'm going to use a custom 3-day chart. You can see it right there. And what it does is give me the overall momentum of what's going on in my formation. You can see I've got resistance. My sell zone opens up around here at 13.21 to 13.28. That's the high and the low. So it's breaking down, and here are our 3-day support areas right around this zone, right? I mean, we are legitimately looking for things right into this area. You can see this moving average, which is much less sensitive. Take a look at this. This is a 30 variable, which I love, that tells me relative motion. It's going to come down and test this area. Listen, if I bounce tomorrow and I cannot get up over 1306, I've got a deeper fade, and my next lines in the sand for gold could be as deep as this region right here at 1265, especially since it's beginning to show bearish. It's got to bounce first, though, because it's been very bullish, because this is initiating here. All of this motion says people who are concerned that they've missed the big rally in gold are going to take advantage of support action to get themselves involved. So you want to watch that very, very carefully. All right, take care. This has been the Metastock map. Good luck trading, and we'll see you next week.